What if I told you that the global economy is built on something that can never truly be paid back? Right now, almost every country on Earth is in debt. The United States owes more than $38 trillion. The European Union, Japan, China, Germany, even the world's wealthiest nations owe staggering amounts of money, which leads to a simple but unsettling question. If everyone is a debtor, who is the creditor? The answer is far stranger than most people realize. Debt isn't just a burden that has to be repaid. It's one of the foundations the modern economy is built on. Wars, financial crises, periods of growth, and even much of today's prosperity all rest on this invisible system. What's even more surprising is that when you follow the trail of debt, you realize the world doesn't owe one person or one country. To a large extent, the world owes money to itself. The foundations of this system were laid centuries ago. In 1694, England was at war with France, and its treasury was nearly empty. The king borrowed money from merchants and promised to repay them with interest funded by future tax revenues. To manage this arrangement, the Bank of England was established. For the first time, a government could spend money it didn't yet have. In return, investors received government-backed bonds. That was the birth of the government bond market we know today, and it quickly spread around the world. From that point on, being a powerful nation wasn't just about owning gold. It was about earning enough trust to borrow money. 3 centuries later, debt has become the world's biggest financial product. Today, nearly every country borrows money. Banks lend it. Investment funds buy government bonds, and ordinary citizens become part of the system through the taxes they pay. So who actually owns all this debt? Let's take the United States as an example. Many people believe China is America's biggest creditor. In reality, the story is very different. Most of America's debt is actually owed to Americans. Pension funds, banks, mutual funds, insurance companies, and the Federal Reserve hold the largest share of U.S. government bonds. China and Japan are still major investors, but together they own only a relatively small portion of the total debt. In other words, America is largely indebted to itself. And this isn't unique to the United States. Japan buys U.S. Treasury bonds. Europe lends money to developing countries. Those countries then invest their foreign reserves back into the bonds of advanced economies. Everyone ends up holding someone else's debt. It's like a poker game, where every player borrowed their chips from the person sitting next to them. The only thing keeping the game alive is trust. At the center of this system are the central banks. They don't just manage debt, they also create new money. Whenever they buy government bonds, new money enters the financial system. That's why almost every dollar, euro, or yen in circulation today exists because of debt. Debt-free money is almost non-existent. For decades, this system worked because investors believed governments would continue paying interest on their debt. But once that confidence begins to fade, everything changes. We've seen it happen in Greece. When the government could no longer roll over its debt, borrowing costs skyrocketed. The economy shrank, and painful austerity measures followed. Argentina has defaulted multiple times. Sri Lanka experienced fuel shortages and political instability after running out of foreign currency to service its debt. That's when the creditors become visible. The IMF, credit rating agencies, and major investment funds suddenly have the power to shape a nation's future. Yet even after these crises, the system doesn't really change. Old debt is replaced with new debt through a process known as refinancing. In today's world, governments aren't trying to eliminate their debt. They're trying to keep rolling it over. That may sound surprising, but the world's largest economies have no intention of paying off all their debt, because doing so could actually destabilize the entire financial system. Government bonds are considered some of the safest assets in the world. Banks use them as collateral. Pension funds invest in them. Central banks hold them as reserves. If major economies suddenly paid off every dollar they owed, the financial system would lose one of its most important foundations. That's why the real goal isn't to eliminate debt, it's to keep it sustainable. But there's one important detail. The idea that the world owes money to itself is only partially true. The interest generated by government debt doesn't flow equally throughout society. Taxes are collected from millions of people. while much of the interest is paid to investors and financial institutions that own those bonds. In other words, debt doesn't just transfer wealth between countries, it also transfers wealth between different groups within society. In the end, there's no single country or institution to blame. Not just China, not Wall Street, not the IMF. The modern financial system has turned debt itself into money. Governments issue it, banks expand it, investors trade it, and every one of us depends on it in one way or another. The real question is no longer, who is the world's creditor? The real question is this: can a system built on trust continue to survive forever? Because in the world of finance, the most valuable thing isn't always money. It's the confidence people have in tomorrow.